Hello, Maverick traders, and welcome out to your weekly currency room. This is Sankit here, and I'll be breaking down this week's price action and most importantly, talk about our upcoming week ahead. Let's get into it. As always, we'll be taking a look at what happened in the markets, look at broader market analysis, take a look at what's happening in the currency baskets, take a look at the news, and then we'll talk about some possible setups ahead. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, let's just take a look at last week's price action. And again, it was a volatile week. So we had quite a bit of volatility in the last 3 weeks. Now, this week's a little bit different because, here we are on a Friday. I must say that this is one of those common Fridays, compared to the last 2 weeks, because we had a lot of news on Friday that comes into the market that really moved things around. But the theme this week was more about, these tariffs that we heard about on last Friday. The implement date on that they got pushed to April 1st. So as you can see that provided a nice relief rally across the board, as some of those fears in the shorter term just get pushed down the road. We saw the same thing happen with Canada and Mexico. As soon as we got the news, those things, things really stabilized after that with, looking at currency pairs like dollar CAD or even dollar Mexican peso. Now, we are looking at the same thing in the broader markets. And now this is a bit of a calm here because there's been a lot of news, a lot of fears, and that just got pushed down the road. So we're seeing the markets rally off of that. And we're also seeing a big move in the dollar and the bond yields this week. We'll take a look at this one because that's a key move, and the dollar breaking that key support area that we need to pay attention to. And we are at the lowest level in dollars since December. So, the big question really we need to answer is this are we at a key level of reversal? So some of those things we're going to discuss later when we look at the charts. But one of the things that was a bit of confusing this week was what the news was as far as the economic events goes. The U.S. inflation data, both the PPI, CPI, they both were higher than expected. So as a textbook, you would think that this would lead to more higher, the stronger the yields and stronger the dollar. But that didn't happen. We saw initially the move was stronger the dollar and stronger the yields, but they all got reversed. So this is where price action is the king at the end of the day. And right now it seems like, that didn't really matter to the market as much. And we just saw that by big relief rally here. So we'll have to kind of see where we're going, in those dollar and the yield from here on. Now, looking at the crypto markets, they're mostly range bound. We had a big move in Litecoin. But that's pretty much it. If you take a look at where we are as far as the trend goes, Bitcoin hasn't really broken out of that key, resistance support area. So it remains a range bound. Ethereum, on the other hand, has been the worst performer. So that's where, we're getting that relative strength and weakness. Now, when we take a look at news events, as you can see that this was mostly US data all this week. So you can see that initially we had the CPI numbers and that was stronger than expected. We got the PPI stronger than expected. So that really didn't support the dollar and the yields. But then here we are looking at the US retail sales today, and that was terrible. It was, again, back-to-back weak numbers that, we haven't really seen these back-to-back weak numbers in retail sales. So here we are, January was weak, and then February is even broader, more weaker. So we're definitely noticing, some hesitation as far as, consumer sentiment goes. So that news was more, supporting that dollar pullback. We got this, the yields going lower. But when we take a look at inflation data, we had a whole different thing. So a really mixed picture across the board. So let's just take a look at last week's reviews and take a look at numbers, then see where we are. And you can see that whole last week, that was again a big week when it comes to the equity markets. We had a nice little gain there. 1.49% on the S&P, 1.81% on the World Stock Index. Crypto again had a big move, but again, remember this is all based on that one move that we had in Litecoin. But outside of that, we didn't really have that massive move. Gold higher, and then we have oil slightly lower. So a lot going on. And if you take a look at the charts here, now this is where it looks interesting to the point where we are at the resistance, but we're not really breaking out yet. So over and over, we are seeing this level getting tested, and we pull back lower. So today again would have been a good opportunity for this to break out, but it didn't. So I think this will likely to attempt for a breakout next week. But until we get the breakout, we want to treat this as a range bound price action. So I think at this point it looks like it wants to break out, but till we have the confirmation, we don't want to jump the gun over here. But overall, as you can see, this is how things have been moving in the last few weeks, where a lot of compression happening here. Not so clear price action. Now, let's just take a look at the numbers in the currency market. As you can see that when you look at the numbers, this was a great week. As far as the number goes, look at the yen down 1.676%, had a big move there. Dollar down almost 1%. And then you can see that everything else kind of went up against it, except the CAD here. So CAD is just, we're not really catching any more new traction here. I think in 2 weeks we have that deadline coming up with the tariff. So I think CAD likely to kind of stay put in that range. But you can see that outside of that, everything else really had a nice move. Euro, pound, even Aussie and Kiwi, they all sort of have a nice move as the dollar pull back. Now, when we take a look at the crypto, you can see mediocre moves here, and then we got this massive outsized move in Litecoin. So overall, not so enthusiastic about this crypto market. I'm mostly following Bitcoin, and until I see a clear break one way or the other, not really interested to jump on into those movements there. Now, let's just jump into our market analysis, take a look at where things are, and look at the charts. So where we are right now, we are at a +2. Market is showing resilience over and over. Every time it wants to go, wants to pull back, it ends up recovering. So I think eventually market would want to break out, but we just have a lot of this, this key level that we have here, the resistance that we need to get that confirmation on the breakout. Now, when we take a look at outside of what's going on here we are with the bond yields, and you can see bond yields. We got a nice little rally going into it, and then boom, last 2 days pull back. So at this point, if you look at the moving averages, they're not going anywhere. We got a support in the yields here. We got the high in the yields here. So could they just go range bound? They absolutely could. Unless we start to see a weaker economic data, maybe that's where the yields probably pull back further. But if the economic data stays strong, I think the yields probably go trade sideways for a bit. Now, when we take a look at the crypto world, you can see that same thing. It has its moments of, strength and weakness. But if you're looking for a trend, now that's not a great, trending chart. This is, again, a collection of all cryptos. It's a crypto basket. But you can take a look at individual cryptos, and you will see the trends are not really as present, compared to what we were getting late last year. We're kind of in this consolidation phase. So going to next week, now we can finally focus on some of the key economic data. Remember, we are putting this little tariff thing on the back burner here. Now, the focus is going to go back into the economic data. So starting next week, we have two central banks. We got the RBA, and then we got the RBNZ. As you can see that RBNZ, they're expected to cut rates, and RBA is expected to cut rates. So we're supposed to get 2 rate cuts next week, and we'll take a look at it and see how that's going to affect the Aussie and the Kiwi. Right now, again, it's all expected. Remember, a lot of these things get priced in ahead of time because it's not a surprise. It's already known. It's not a known unknown. So we just have to look at the statement, and that's really where you get that bigger move. Is that a dovish cut, or is that a hawkish cut? Meaning that, are they going to cut and they're going to continue cutting, or is it going to cut and then going to hold? So that statement is really where we're going to get that bigger move. So watch out for that statement. So that's the one that we're going to take a look at. But outside of that, we have Canadian CPI. We'll see if this follows suits with the U.S. inflation data. If we see an uptick over there, get the wage data out of the Australia. They get the employment data out of Australia as well. So you can see that Australia definitely has a lot of data next week. So that's something we're gonna pay close attention to, as the currency basket on the Australian dollar looks interesting here. Now on a Friday, we have again a lot of retail sales data from UK, from Canada, and we got the services PMI from both the Eurozone, UK, and US. So you can see that all next week we have good event risk that would give us some decent opportunities. And again, these are more predictable because we know when it's going to happen and we can be, prepare ahead for it. So as we get less volatility in the markets, I think this is a good time to start focusing on these news events, on these economic events. So as we go into next week, again, I think markets are likely to break out through that resistance level, but till we see that confirmed breakout, we want to treat it as a more range bound. So that's the game plan going next week. Things looks bullish, but we need a confirmation. 2 central banks next week, Monday and a Tuesday. So early next week, we are going to get more of the movement here. Remember that on a Monday, it's a holiday. The equity market is going to be closed. The currency market is going to be open, but equity market is going to be closed, which means that we might see some lack of liquidity, during the day. But that should resume by the end of the day. Now, that's where we are looking at more on the hunting, all these news events. I think they're going to provide some good, opportunity, especially around those central banks. So let's just jump into our currency analysis, take a look at charts, and go look at things one by one.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
Let's just start with the crypto here. Well, let's just start with the Bitcoin here. And like I said before, we are, if you look at the moving average, it kind of tells you the story. When they're crisscrossing like this, it means that it's not really trending higher or lower. So even though we're getting a little -2 here, this is range bound. So nothing really to report there. Crypto, the way you trade crypto, you need those massive trends in place. Since you cannot short the crypto, you only go long the crypto. You need that trending market environment to order to buy it. Now here we have with Bitcoin Cash. You can see this is showing more weakness. Here's Ethereum, more weakness here, and then again we got this little surprise move out of Litecoin. But remember, the way Litecoin moves, we can have these periods of movement. But you can see that in the end of the day, it doesn't really result into a long-lasting trend. Now, let's take a look at currencies, because let's start with the dollar. I think this one looks very interesting to me, because you can see that we went sideways. We have been kind of going in these little waves that are taking place, definitely making a little lower highs over there. So that's a downward pressure there. And then here we are getting the break. So looking at this velocity score, you can see that we are sitting at a -3. So we went from, a +1 day, a -1 day to now, getting that bigger breakdown to the downside, 2 consecutive days is down and clear breakdown. So we'll take a look at a lot of the dollar pairs and then see what setups we need to look for. But clearly the trend is change to a -2. Now with the Japanese yen, and this is the one thing that we're seeing right now is a lot of big moves both ways. Yen went from like a one-way currency to be able to trade both ways. We had movements where the yen looked really great, and then we have big movements where yen looked terrible. So this is where yen is a little bit challenging or a little bit volatile to trade because, we're just getting big movements on both sides. So you really have to trade, look at the velocity score and just get out when velocity is turning negative. When the velocity is picking up, we want to be in it. But as you take a look at the trend score, it is a +1. But you can see that based on the chart that we're looking at today, I just don't have a good strong call on this one. This is not a screaming buy, and this is not a screaming sell. But in between those range, I think we can have good opportunities. So I'm looking to trade yen both ways. When it's strong, we can look at the momentum to the upside. When it's weak, look at the momentum to the downside. These trends might not last the longest. As you can see, we're getting like 3 days run here, 3-day down move here. So, these trades probably, last like a day or two, but, nothing too long term. Now, the Swiss franc is the one that really, annoyed us here this week because, we got a big breakdown. And we just talked about how Swiss franc has been sideways for the most part. And we had a nice confirmation. Again, this looks kind of similar to the US dollar currency basket. But guess what happened? We got that big move down. We got an inside candle, and then here we are back up in the range. So the trend, if you look at it, we are below the moving averages. But again, pay attention to these support and resistance. As long as it stay between that, it's not as directional. And this is another thing, if you want to look at that example, like this, we're going to take a look at the dollar the same way because dollar chart looks very similar. We got a support, and we broke lower here. So what we want to look for next week is that to make sure that it doesn't, go back up into the range. As long as it's still below the range, I think then that gives you another area to continue hunting to the downside. But if this kind of does the same thing, then you have to really take a step back and then, pare back on your bearishness. So that's where we're going to take a look at dollar going next week. But now Swiss franc, not really going anywhere. Here we are with the euro. You can see that, it was down over here, and then we got a nice little rally up here. So we are back at a 0 on the euro as well. Again, remember the theme is really range. And I've highlighted that quite a few times that this is not a good trending market. You're getting moves like a 3-day move down and another 3-day move up. So your time horizon has to be a little bit shorter. Which means that, if you're looking at like a 4-hour chart, hourly chart, like those charts are working great. But then on a daily chart, these trends are not really lasting as long. So a lot of the things are kind of in this middle of the range. And we just have to swing it based on whichever way we're getting that momentum. Now, the British pound, look, very similar. We got a little breakdown here and a little bit of recovery here. So we are back to where it was, another 0. So a lot of the currencies you'll notice today, on the currency basket, they're kind of showing 0 as a trend score. Here we are with the CAD, same thing. We got the resistance, we got the support. It's just not really going anywhere. And I don't expect CAD to go anywhere because, like I said, this tariffs that got pushed by March 1st, we are halfway through the month already. So that's just going to come up in 2 weeks. So something we got to continue, keeping a close eye on. And, if you want to take a look at what could happen, just look back just 2 weeks ago when CAD was really volatile because of all those tariff threats. Here we are with the Aussie. Now, Aussie looks interesting to me here because you can see that this has gone sideways for, the last couple of months. Now, we don't have a breakout confirmation yet, but this is where it has the potential, especially if the equity markets can break out. If the broader market sentiment can break out, I think then that gives you the right sort of a market condition for this to break out. But till then, I don't have a strong score on this one. So that's why I'm going to kept it at 0 here. I'm looking to swing it either way, but I need to get that confirmation. Now, here we are with the Kiwi. As you can see, that Kiwi has been looking terrible. And then we got a nice little bullish day today. And this bullish day today was, a big day where, we kind of erased the last few days of losses in one candle. Now, that's a bullish sign. You can see that this thing is looking a little bullish here. So we will take a look at next week as well. Same thing. We got a resistance. This is just a 1-day move, right? So one of the things you look in the sideways price action is that lack of continuity. So we can have a big candle like this, and this can easily get erased. Why? Because it's just not a strong trend taking place. So we need to get that confirmation we need to get things going to get that higher high and higher low. So these things again goes on a watch list here, but then we want to wait for those confirmation next week. So here we are with the trend score. You can see a lot of these things are in zero. If you have a trend-based strategy and you're not really finding good setups, or you're just getting stopped out, well, that's the reason why things are shifting back and forth very quickly. And unless you're shifting with the market as quickly, you might find that a lot of trades that are working and they just stop working and they're getting stopped out. That's just the nature of what we get in the sideways undecided markets. Now, the biggest one really here is the USD. We'll take a look at the USD going into next week. I have the Japanese yen as a +1, but remember, want to use some caution here with the yen. And then same thing with the dollar. I love the fact that it has broken down, but same thing. I need to get that follow through. Today was the first break, the first candlestick below the support area. So we need to make sure that it doesn't really try to recover. As long as it stays weak, I think we'll have a nice downside move coming up. Now, here we are with the velocity. You can see that things are kind of all over the place here, but pay attention to what the trend's telling us. And, in between, we can have some days like Kiwi. Wasn't expecting Kiwi to be this strong, but you can see that that's the strongest currency today. So you are going to get these, velocity where, it's pretty strong one over the other. But when you take a look at the trend score, that's really where you get that direction. So you know exactly which way to play. So let's just jump into our possible trades ahead and let's take a look at some setups. Now, let's just start with the USD currency basket. As you can see that this thing had a nice little break and now it's retesting some key support area. So let's just zoom out and see where exactly we are pausing. And you can see that this is the area that we had, used as a nice resistance level. We bounced off that level a couple of times. So the prior resistance is now the support. So one of the things we want to make sure is that, we don't get that quick recovery where, I know it's a down day. Everybody's excited to short. And next thing you know, you get a big candle the next week and then we are back in the range. So we need to really stay in this little range, make a little low base and then break lower. Now, when we take a look at a 4-hour chart, that's where we can get some ideas. Now, this is a 4-hour chart and you can see we are right into that support area here. So we have this range that we are dealing with. And as long as we stay within this range and maybe dip lower, I think that's where we're going to see the next leg lower. So that's really where we are with the US dollar. I think it's been an interesting play, but now it's getting to the point where, the question really comes is that a reversal point? You can see that, we have a very similar moment like back in September last year, September, October, where dollar was actually downtrending. And then boom, we had this big moment here where we just had a massive rally and you just kept going since then. So same thing. Now we are in the situation and, is this the time to, switch the gears and, go more bearish? So I think this is where, we are seeing like in this scenario here, we are seeing lower highs. Things have been more range bound, but I think at this point, look for bear rallies to short into for a continuation pattern. So looking at that again, we can take a look at a lot of the dollar currency pairs, and some of the currency pairs had nice breakout. I'm going to start with the Aussie dollar. As you can see, the Aussie dollar had a nice breakout. This thing has been sideways for the most part. It did push back against that resistance a few times, and then here we are with a clear breakout. So at this point now, prior resistance is now the support. So in this situation, same thing, pullbacks to buy into. Look at this one. This thing has been in this downtrend for the longest time. This thing pulled lower here, again, same thing like last September, October, where things started to turn, and we have been in this downtrend since then. So it's a pretty important moment for these things to kind of break out of those big congestion zones. So at this point, we probably want to take a look at higher highs and higher lows. So every time I get the question, which setup should I look for? Again, look for pullbacks to buy into. So look for either pullbacks or bases for a continuation pattern. So that's where we are, especially if the market stays strong. I think this has a good chance. Now, keep in mind is that on Monday night, we have the RBA rate statement. So things can change pretty quickly with that. But once that's behind us, I think we can have a better outlook on the Australian dollar going forward. So here we are with the Aussie USD. Let's just see how the Kiwi USD looks like. Again, same thing, very similar setup. So you can see that a lot of the setups kind of look very similar. We had dollar CAD that moved lower. Again, same thing. Breaking below those key averages. We take a look at Euro USD. Same thing. This one is right at the resistance, so this is a good area if you want to look for a further continuation above that 105.50. So this is not broken out yet. Let's take a look at pound dollar. This thing again has a nice breakout, and even though if you take a look at dollar Swiss franc, now that thing we got a nice support area. We were kind of stuck in between this 20 and the 50 moving average, and here we are trying to break that lows here. So as you can see that this thing right now it's looking pretty interesting, and the question is, is this a time to things to fall apart, or is this going to trick us, just like how we did with the Swiss franc, where we had a nice breakdown and it just reverses. So looking for confirmation is important, is key here. So the dollar pairs looks the most the most interesting to me here. Now, if I go into all the yen crosses, you'll see that yen crosses, they were moving down, but then we're getting a nice little bounce. So the question really comes in all these yen crosses that, is we have been in this little downtrend here. So you can see, we can easily roll again from here. But if this breaks out higher from that, I think we probably could break out of that little zone here. Same thing goes with all the yen crosses. Here we are with the Aussie yen. You can see there's some overhead resistance. So if you're looking for a breakout, it needs to break above those levels to give us that confirmation. So I think both the dollar and the yen crosses look pretty interesting here. Now, in between other currencies, I'm not really seeing a whole lot of divergence. One thing I want to take a look at next week is Aussie Kiwi. You can see that this was a big notable move in Aussie Kiwi. And you can see that this was a big breakout point in Aussie Kiwi, and that we just fell right back to the support here. So at this point, Kiwi looks better than the Aussie, but you can see clearly the trend has been mostly bullish the Aussie, not the Kiwi. So if you're trying to decide between the Aussie and Kiwi, take a look at this currency pair, because this one looks interesting to me. So again, in conclusion, we're looking at, it's a holiday shortened week, so just keep in mind, Monday, we'll see lack of liquidity in markets, but we're looking to be active around Monday night for the RBA rate statement. Most importantly, we're taking a look at those dollar currency pairs. Like I said, they're the one that looks the best right now. So looking at those currency pairs and then looking for that confirmation and continuation patterns to jump into the trades here. So looking for that follow through moves going to next week. Again, keep in mind that a lot of the other currencies are kind of in the middle there. So you're just trading the yen, the dollar here, or you're just trading the yen here. So make sure that you're kind of keeping up with that market momentum. And see if we get that continuity going into next week. Thanks for joining. Have a good long weekend ahead. We'll see you in the next one. Happy trading. Bye-bye.